Is the recession finally here? It's I don't know. It's weird, man. It's weird. So I'm just mind my own business, and I get this email from Brian Westbury and the boys over at First Trust Advisors. Right here, retail sales declined 0.8% in January. If you factor in a revision of previous months, which always seems to be negative, retail sales fell 1.4% in January. The drop in sales was led by the volatile auto sector, but stripping this category out does not improve the picture. Sales excluding autos fell 0.6% and were down even faster, 1% when factoring revisions to previous months. Overall, retail sales are up a meager 0.6% in the last 12 months, but that includes a surge in sales from January 2023. You take that off the 12-month thing, and we're probably looking at negative in retail sales. It appears that consumers are finally running out of excess COVID savings, which are boosted by temporary government stimulus. And so I want to talk about the importance of retail sales, of personal consumption expenditures. Pablo does too. All right. So GDP is based, 70% of GDP is on PCEs, personal consumption expenditures. I just bought this guy, my man Greg, told me to buy him some of these rawhide chew things, which I just got from Good Living or something like that, because his breath stinks. So I said, just buy him some. All right. So that goes into retail sales. You know what I'm saying? Because I want to make sure Pablo's breath doesn't make my freaking face fall off because it stinks so badly. All right, so when I do that and you do whatever you're doing and we all do that, it goes into GDP. Actually, my man Richard Vague's book, The Paradox of Debt, explained GDP in a way I'd never heard before. It's just a fantastic book. And I interviewed Richard a couple months ago. What a wonderful, wonderful book. But anyway, so if retail sales are dropping, what does that mean for the growth of the economy? So let's keep going here. Very interesting, actually. Retail sales have fallen in 3 of the last 4 months, and while recent data suggests that the good side of the economy may be already in recession, the same cannot be said for the services side. Sales at restaurants and bars, the only glimpse we get at services in the last report, rose 0.7% in January. These sales are still up by 6.3% in the last 12 months and have yet to show a sign of slowing. But it's important to remember this. I've said this 1,000 times about, what was that? About how retail sales work. Remember, if I buy 10 widgets for $10, that's $100 of retail sales. All right, it's the number of product times the dollar price per sale. That's $100. If I buy 9 widgets at $12, that's $108 of retail sales. So it looks like my retail sales went up by 8%, but in actuality, my production went down by 10%. Finney's got this huge stick he's trying to bring up here. Does that make sense? So 10 versus 10, 10 times 10 is $100 of retail sales. 9 times 12 is $108 of retail sales. What is better? Well, if you're trying to grow the economy, it's certainly better to have sold 10. You'd want to sell 11, as a matter of fact. You want to sell 11 for $10 as opposed to 9 for 12. So what we see here at the end thing is, while retail sales are up, one of the key drivers of overall spending is inflation. Just like I told you right there, we had a 20% increase in that last example I gave you, from $10 to $12, 20% increase in cost, and with a 10% decrease in actual products being sold. That's not good. Retail sales are still hovering near record highs. But in real inflation-adjusted terms, they've been stagnant for 2 years. 100%. In the last 12 months, real retail sales are down 2.4%. Our view remains that the tightening monetary policy since last year will eventually deliver a recession. Expect more deterioration in real estate sales and real retail sales, into 2024. I 100% agree. Now, check, that comes on the heels of the CPI being up right here. Just, what is that, a Monday? I think this came out. Didn't this come out on Monday? Can't remember. I think it was on Monday. Yeah, right here. We had a hot inflation. So hot inflation is just driving retail sales. That's all in terms of numbers, the net or gross number, whatever. The total number, I guess is a better word for it. But I'm telling you, man, it's the personal. So then we see this. Check this out. So here's the inflation that came in higher than we anticipated. Inflation accelerated at the start of the year, showing that it's still an important problem. And the Federal Reserve should not be rushed into cutting rates. And this goes back to, I want to address something my man Chucky B just sent me. The M2 measured money supply is down in the past year, but the aggregate may not be directly comparable to history, and even so, lags are long and variable. All right, so anyway, we're saying, wait a second, how could inflation still be going up when M2 money supply is going down? And that's the challenge that a lot of monetarist economists can't figure out. So anyway, then we got right here, PPI rose. So industrial production declined, PPI rose. Producer price index. So CPI, PPI are two different things. Just because the prices are rising doesn't mean that's not recessionary. Now, it's not deflationary, I'll tell you that. But that's where we start looking at stagflation, which is a concern. So check this out. I want to show you guys something. Wall Street Journal, the 6 months that short-circuited the EV, electric vehicle revolution. I'm just going to show you something I posted on my Facebook page right here. Electric vehicle retail sales as a share of overall U.S. vehicle sales. So in 2022, EVs are 4% of overall retail sales. And then in 2024, they're back under 8%. So they went from 4 to 9, and now they're back under 8. So a significant drop off there. But check this out, because electric vehicles suck, dude. Everybody knows that. I want to show you, there's another graph here. All right, so days of inventory at U.S. automobile dealerships based on recent sales data. So you can see the inventory is dropping here while it's going up. But still, at the end of the day, the days of inventory is still electric vehicles are significantly higher than gas and hybrid vehicles. What does that tell you, though? The inventory is going up on gas and hybrids, while the days on inventory are going down. They're still significantly higher than these right here. So everyone's going to look at this top and say, look, the days of inventory of EVs are slowing down because auto dealers aren't buying the electric vehicles from the manufacturer. They're just not. But look at the inventory here. See what's happened basically in the last 6 months or so? Huge increases in inventory. We're talking from 30 to 50 days. I mean, that's a freaking 40% increase in inventory for hybrids, for gasoline. Days of inventory. So while this is dropping, you think that means there's more demand. There's just not. There's just less supply. People just aren't buying them. So they're not getting them from the dealership, not from the manufacturer. That right there shows you something, though. The increase in inventory. What does that mean? That means people aren't buying cars as much. And electric vehicles, just come on, they're just dumb. I mean, at this stage, they're just dumb. Oh, the battery technology is coming. Oh, never heard that before, Thomas Edison. Oh, my goodness. So, I mean, what does that tell you? So check this out. I want to show you something here right here. So this is a silly person. Lindsay Grover, a Dallas-based pediatric anesthesiologist, says her husband was pushing her last year to replace her hybrid with an all-electric vehicle for environmental purposes. And these people just aren't bright. But I want to show you what that's. I just had to read that because it's so stupid. But I want to show you something here. Average retail transaction price by vehicle type. So you can see the prices are falling. So 2022, they went up. 2022, they stayed pretty flat for that. Prices are falling, yet the inventory is increasing. Isn't that? The days on inventory is increasing. Isn't that interesting? People are finally seeing reality, says Toyota. For years, yeah, Toyota crushes. Right here. Nobody's opened the door to check out electric vehicles. There just seems to be this hesitancy that's hitting hard. I mean, look, electric vehicles suck. Everybody knows that. But I don't think it's that. I mean, I do think partly, but I think it has to do with people saying, I'm guarding my money. What happens when people guard their money? And you think they're guarding their money because the interest rates are so high? Yes, I do have something that has to do with that. Absolutely. But still, man, when people guard their money. I was just talking to a guy just the other day, a couple. Bill and Jill. I said, Bill and Jill. They said, should we pay off our mortgage? It's 2.5. I said, no, you're getting 5.25 in your money market. But at first I had to consult with Pablo to see what he said. He said, no. He said, so I said, no. You know what I'm saying? So it's like, how many people are going to rush out to take loans? Not that many. How many people are going to rush out to spend money when they're getting 5% in the money market on a car? Not that many. I just don't think it's that many. On top of that, people are nervous about the economy. Yeah, I don't know, man. I absolutely could be wrong. But I've seen these numbers. I'm like, that tells me. I mean, look, if you read about Japan and you read about the Great Depression here, and you read about what's going on in China here, you see there's a trend up. Is that when people stop spending, regardless of interest rates, we go into recessions and then deflation. Do I expect deflation anytime soon? No, I don't. But I'm a long-run deflationary guy. Absolutely. China's going to lead the example after seeing what happened in Japan. Could I be wrong on that? Absolutely. Which is why my portfolio is still hedged. About 65-35, stocks to bonds to cash. It's just interesting. I don't know what to make of it. But this goes back to what my man Chuck B just wrote. He said, Josh, Wellesley is down. I'm thinking about selling it. I said, really? Because, Chuck's a smart guy. He's accumulated sizable portfolio, sizable net worth. I said, really? So you're going to sell when it's down? He goes, yeah, I know it seems, counterintuitive, but just seems to be underperforming. I said, oh, okay. And so we're going to sell when we're down to buy something that's not down. He emailed me back, so I get your point. I said, well, look here, man. The issue with the recessionary stuff that we're looking at is that the likelihood of interest rates going up isn't high, which means that the likelihood of interest rates dropping is much higher than the interest rates going up, in my estimation. I would have thought interest rates would be, well, actually, I never thought they'd be cut until 2024. But, here our second month, it doesn't look like they're going to be cut. But you're still getting a high interest rate, dude. A high interest rate for your bonds right now. So you just sitting by waiting for the bonds to go, clock in those interest rates. Yeah, you took on the chin a little bit in price. But, those days are going to come back. That's how bonds work. If you haven't signed up for my investment course, I'd show you how this works. So you're sitting there thinking, all right, I'll clock in that 4 and 5% bond. And at some point, the interest rates most likely will go back down. If not, I'll just keep getting 4 and 5%. That's what Wellesley's perfect for. Anyway, I was surprised to hear that. And I'm getting more of these kind of emails like about Bitcoin and, selling stuff that's down. I'm like, it's not just Chucky B. I'm like, man. It's a fear of missing out, and they're like, man, I can't believe this is down. And I say, well, that's where cooler heads prevail. And I'm pretty curt, and I'm not mean. I'm just like, you're gonna sell. And he emailed me his email. I said, you're gonna sell it when it's down. And he emailed me something back. And I said, so again, you're gonna sell it when it's down. You know what I'm saying? Because when it comes to this stuff, people don't pay me to be nice. They pay me to be to tell them the truth that they need to hear, in my opinion. Anyway, so again, if you're looking at selling out your bonds now, I just think it's a mistake, dude. 100%. I could absolutely be wrong. But the nice thing about bonds is if they're government bonds, they're not going to zero, and you're still clocking 4 and 5% a year. I'll take that to the bank. All right. Love your thoughts. God bless. We'll see you